Hi everyone, we welcome you to another special edition of Markets Technicals at Large with Mlotywa. My name is Talbie Mlotywa, the official host of Markets Technicals at Large. As usual, we are going to do technical analysis of the foreign exchange market, and now you can see that this morning we are going to be busy with the Great British Pound against the New Zealand dollar. And our time frame you can see there is 4 hours, and then we are dealing with candlesticks. So that means for this day we are expecting only 6 candlesticks out of the market from our analysis, since we know that in a day we have we have 24 hours. Now, for you to know how many candlesticks we will have for the day, just take 4, you divide 24 hours, and you'll see that you'll get 6. So we'll expect 6 candlesticks out of the market today. Okay, guys. So I want us to do the analysis on this market, and the most important thing that we have to remember is the strategy. You will remember that our strategy consists of supports and resistance as something that we begin with before we can proceed any further with the analysis. Now, what I will do now is look for the active supports and active resistance, which will allow us to determine how the market moves, looking at technical aspects, and thereafter predicting the position or the direction of the market, and also determining an entry point, whether to buy or sell the market at that point. Okay, without wasting any time, guys, please let's get started with the strategy of analysis. Remember, here we are only dealing with technical analysis. I told you how the fundamentals affects the market. Okay, guys, please don't forget that. I'll repeat, the fundamentals only affects the volumes of the candlesticks, and the market is driven by the technical aspects. Okay, guys, please. So now I'll go on and check for active supports and resistance. So you can see here, I see something that is our active resistance. So an active resistance. Let me highlight that so that everyone can see. Okay, there. Okay. Why am I saying this is the active resistance point? Okay, you'll see that we have one point here, we have another point here, we have another point here, and here. So you can see we have more than 3 points on the market, which are resisted by this line. Okay, so this line is our resistance. Now I'll plot this one here and get on with the size and shade it so that it can be visible to an eye of a trader who is watching this video. Okay, guys, and denote another resistance point. There it is. Okay, everyone can see that. Let me highlight that quickly. Okay, guys, and another resistance. That also be highlighted and shaded with the yellow color. Okay, guys, this one here, and there is another one here. Okay, I hope everyone can see these points. These points, you can see the resistance. I told you it's resistance, so that means the market gets blocked when coming to this line. Okay, it is not permitted to pass through. Okay, now moving on, we will go on and look for other parts of the market which will enable us to determine the direction. Okay, let's look at the other parts of this market. You can see here we have this part. Okay, so we have a resistance here, we have resistance here, and so these are the points which are important for us to determine technical aspects of this market. Okay, I'll denote those points. I'll denote the points. You'll see that. Let me give this one a different color there. Okay, so guys, the resistance points, I'll denote them with the yellow color, and then the support points, I'll denote them with a different color. I'll choose after that. Okay, there. We have resistance at this point. You can see that. And we also have another part which reflects market being resisted here. Okay, the market is being resisted also here. And you can see another thing here about the market, that this is a support. So how many supports do we have? We have one. See, 1, 2, and we also have this point. Also have this point, guys, please. Okay, we also have this point. Let me give this point a different color also. I'll give it red. You can see there's a point here, there's a point here, it's a support. And we also have another thing going on here. Let me put the line there so that everyone can see. Okay, this is not so active, and I think it should be left out. Okay, it's active. You can see this part, this part, this part. Okay, this parts of the markets, important parts. Let me highlight the line and so that everyone can see. Going to the next point, we can also see something at this point. Okay, let me also give that. Okay, you can see that it's a resistance here and becomes a support here. Okay, guys. Remember, if it was a resistance previously, then it will become a support when the market breaks through. Okay, please, guys, keep that in mind. You can see that this line, the green line, was preventing the market to go on top or to go above this rate, which is 1,7451. But then eventually the market managed to break through this rate, and the line, the same rate, became the support of the market. Okay, previously was a resistance, now a support. So that's how the market moves. That's how the market moves, guys. Please. Okay. Moving on. Okay, you can see we have those points, supports and resistance. Yeah, let me denote my support here. Okay, so my resistance. Okay, there is my resistance. Told you guys just now that this will be denoted with a yellow color. Okay, there is a yellow color placed there. Now, guys, let's look at our supports line. Okay, I think here is our supports point, active points. So support, we give that a different color. which one I prefer. This one, okay, give it the purple color there. Those are our supports, okay, and we have another support here. We have another support there. And placed like that. You also have other supports on the market on this level. You can see the rate here is 1,73060. So it's another part where you get to see the support of the market. Previously a resistant, guys. Previously a resistant, remember. So it was a resistance, now it's a support. You can see it on the market. I'll show you why I'm saying it was a resistance, but the points which reflects what I'm saying, they are very minimum. You can see that this is the point. It's another point here. You can see the market was resisted here and here. Also here you can see that, and now these parts, now they becoming the supports, or this rate now becomes the support of the market, okay? And you can see that this area is supported by the rate 1,72060. Give that a purple color. Okay, the purple color there. Okay, there. Okay, and I'll go on to this point again. You can see we have another support here. Why am I saying this is support? You can see previously there is resistance here. The market was resisted by this line. Now the market came back to this line after it breaks through, and it did not break below the line. Instead, it turned directly on top of the line. So this line was the support. It supported this point, or it supported the market, so that the market retraces. You can see that there was a retracement here. The market went back and came back, but never crossed the green line again, because this green line was the support. You can see that. And previously, this support was a resistance. So this resistant line, previously, it did not allow the market to pass through. And eventually, the market managed to pass through, and then it tried to come back to pass through the same rate which was resisting the market, and then it bounced there, meaning that this line now is a support. Okay, I'll put the purple circle there so that it can be clear to everyone. Okay, here is the circle. Okay, guys, please, this is technical analysis. Do not confuse it with anything. And this is my strategy, okay? My strategy, and it's proven to work with high certainty, okay? I trust my strategy. So guys, please, if you want to learn this strategy, feel free to contact me on this number, 071-1095-300. Please guys, if you really need to learn this strategy, feel free to contact me on this number. If you are interested in forex trading, you are still new, please, we will start you from scratch and give you the basic concepts and everything that you need to know in trading. Okay? And if you need mentorship, we are there for you also. We'll give you and guide you how to trade. And if you want to subscribe to our signals, guys, please just call on this number or contact this number, and we'll give you the rest of the information. Okay, please guys, do not fall for anything else, because this one is legit. Okay, and moving on, you can see on this part was the resistance. You can see the yellow two circles. Now it is a support. You can see it became a support at this point and a support at this point. Okay, let me denote that. And okay, sorry guys, let me put the circle there so that everyone can see when I'm saying active supports and resistance. What is it that I am talking of? Okay, active supports and resistance. Active supports and resistance, guys. This is how the market moves. Market moves by means of support and resistance. Support and resistance. Okay, I'm placing the purple circle there, and it's another one. I'm placing another purple circle on the other part of the market, which is regarded as the support also. Okay, support point. I place this here. Okay, visible to everyone, guys. Please, if you don't understand, feel free to contact me on this number, and it will be my pleasure to help you. Okay, I help a lot of people who are contacting me. Please, guys, do not hesitate, do not be afraid. I have information and I'm willing to share the information with you guys. Okay, so contact me on this number and you will know how these things are done. Okay, moving on. Okay, here you can see we have our support denoted. Okay, and we also have another resistant part of on the market on this rate. Okay, guys, you can see this rate 1,73067. Okay, it's another rate there, and on the rate the market is resisted on this rate. Eventually the market pulled or broke through the support line, and it came back to this point. Okay, broke and came here to be supported, and then after that it broke the support, the resistant line, and came here to be supported. Now the main question is, what's going to happen from there? Okay, what is going to happen from there? Okay, let me place my points and discuss that after. Because remember, this was the first part of the analysis, which involves determination of active supports and active resistance of the market. This is the first part of the analysis, guys. The first part of the analysis. Okay, this shouldn't take much of the time, guys. I think 30 minutes is enough to do this kind of analysis, guys. Please stop wasting your time on the things which are not necessary. Okay, and place the last point there. Okay, so you can clearly see the purple circles there and the yellow circles. So the yellow circles, guys, I'll write this down. Yellow circles denotes, okay, the yellow circles, those are resistance. Okay, or resistance points. Those are points where the market is obstructed from passing through a certain rate. Okay, and we go to purple circles. You see that, guys? Purple circles there, those are your support points. Okay, support points. Okay, I hope you guys understand this. And please, guys, please feel free to contact me on this number if you don't understand what support are, what resistance are, so that we can clarify that to you, so that you become better in knowledge. Okay, and we go to the second part of the strategy. We are done with the support and resistance. You can see the purple and yellow circles there. And I'll plot this line, guys. I'll plot this line, okay? This is a trend line, guys. This is a trend line. This is a trend line, okay? I hope it's clear. This is a trend line, guys. Let me enlarge the trend line so that it becomes visible. Visible. You can see the trend line on top of the support points, okay? Now, what do we do after the trend line? We draw what we call Elliott wave, guys. So we'll have this point as our first point, second point, and from the second point we have the third point, and we go to the fourth point, and then we go to the fifth point. Now, the part which is more important is the fifth point. Okay, guys, what is happening on the fifth point? That means the market is going to change the direction on the fifth point, guys. Okay, please, guys, please don't forget what I'm saying here. Now, as the first point, you can see the first point. The second point has to be on top of the trend line. Okay, and the third point also. The fourth point has to be on top of the trend line, guys. Okay, and the fifth point finally on this point. Now, one will ask, how do I determine the entry point? Okay, you will see that. Let me, because we know now that the market from that point, which is the fifth point, the market will be directed in a down trend. Okay, but then how do we know if that's the safe place to enter the market? Do we know that for sure? Okay, it's one way to find out. Okay, I'll open another type of a chart, this one, okay, and show you that at this point of the market, okay, it inserts the line, the horizontal line. You can see that this part, okay, see this part, sure everyone can see, guys, it's the same chart. You can see it's a Great British Pound against the New Zealand dollar, and it's H4, guys. You can see that H4, okay, H4. So it's the same chart. Difference is that that one is a charting system where you do technical analysis, and this one is a platform, MT4. You can see it's live, where we enter our trades and either buy or sell trades. This is where we do the trading part, and then here this is where we do our analysis. So I just wanted to show you that here guys, you can see that the market touches this point previously, and that the market now is around this point now. So that means this point is a safe point to enter the market. You can see why? Because this is the resistance line. The market is resisted at this point. Okay, the market is resisted at this point, and we also see that this is a point where we see the fifth point of the Elliott wave. Okay, this is where we see the fifth point of the Elliott wave. Okay, guys. So here it's a safe place to enter a sell trade. Okay, here at 0.5, guys. At 0.5, we do what? We sell. At 0.5, we sell. The market is changing the direction at that point. Okay, we sell this point, guys. We sell this point, not forgetting our risk management strategy. Okay, the risk management part is very important, guys. Please, guys, listen very careful. The risk management is very important, and I'm talking from experience. Okay, if you don't manage your risks with care, you will lose your capital. Okay, please, guys, be very careful when it comes to this part of risk management, meaning that you need to set your stop losses and take profits. Okay, so now we said that this point is where you sell the market. Okay, guys, remember, guys, if you don't understand what we are doing here, feel free to contact me on this number. Some certain number of people who are contacting me already, and I'm busy helping them with this, with the knowledge of trading. Okay, and how I do my strategies and why am I using this strategy. I explain to people who are contacting me. If you don't understand what is happening here, please feel free to contact me on that number. I'll definitely help you. Okay. Okay, guys, moving on. So at this point is where we enter our sell trade. Okay, and as I said, you need to determine your stop loss. Okay, you need to determine your stop loss. Okay, and that will come in effect. Okay, let me cancel this after this. Okay, now we will place our Fibonacci here. It starts from this point going up to the fifth point, guys. Okay, up to the fifth point, and just you see the fifth point is at this rate. Okay, 1,7966. This is where you enter the market. Okay, this is where you enter your sell trade at this rate. Okay, let me write the rate here. Entry point as your entry rate. Okay, entry rate. So it's 1,79669. Okay, everyone can see that. Entry rate is that. Let me remove this, guys. Whoa, I removed all. Okay, there's my information. I removed those, guys. Okay, now this is your entry rate, right? You have to guys, you have to place your stop loss 30 pips away from the black line, guys. 30 pips away from the black line. Okay, so I'll just put this, and we will calculate and see if we achieved our 30 pips away from the black line. That's risk management, guys. You need to be willing to lose less in order to gain more, guys. You understand? I'm sure most of you will understand what I'm talking about when I get to that point of explaining the parts of probability, the 50-50 trade. Okay, you have to understand that you need to be willing to lose less in order to gain more, not the opposite, guys. Okay, and that way, if you can preserve this strategy in that, or this risk management strategy in that manner, guys, you'll always make profit. Okay, you'll always make profit, always make profit. Just that you need to, guys, you need to be willing to lose less in order to gain more. That's the only way to make money in foreign exchange market. Okay, so, and that part becomes more important when you get to this part of risk management. Okay, now we'll calculate how many pips are going to be lost at this point. Okay, guys. We will say this one. Okay, we say this one, subtract this one, and we get to see that. Okay, let's go to our calculator. Here is our calculator. Okay, so just want this to be at least, or at most, guys, at most 30 pips. Not more than that, guys. Not more than that. 30 pips is enough. So you will be willing to lose. That is 1,080,761. Okay, let me cancel the one. Some of you guys will remember that the last number is called pipette. So, okay, guys. So you can see that. This is 11 pips. Okay, guys. Let me start. That is 1,8076 and minus 1,7966 equal to, okay, there's a 0 here. That's a lot. Okay, that's a lot. That's a lot. Let's bring it down. Okay, let's bring it down. Let's bring it down. It's a lot. Okay, guys, it's a lot. We don't want to lose a lot of pips there. I'm sure you saw that that is 110 pips. You can't be willing to lose that much. Then how much are you willing to gain if you want to lose that much? Okay, guys, so that is 1,178. Okay, 17 and minus 1,7966. There's 51. Okay, still has a lot to lose. Okay, so we can stop at this rate so long as it's on top of this part, guys. So long as it's on top of this part. Okay, this is the resistance. This is where the market is resistant. Okay, so I'll place the horizontal line there so that you can see that so long as the trade or the stop loss is on top of this point, then you are safe. Okay, you are safe. You won't lose much of your capital if the trade goes against you. And see the dotted line there, guys. Please, guys, that dotted line, it shows you the resistance, and on top of that resistance is where your stop loss should be. Okay, and it should be on top of that. Okay, so now what do we expect from 0.5? Okay, I'll put the Elliott wave, guys. So from 0.5, I'm expecting to see this 0.1 there, 0.2 there, 0.3 there. Okay, 0.4 and 0.5. This is what I am expecting, guys. This is what I'm expecting. Or 0.5, it can come to this point. Okay, we can look at that from this part. Okay, so this point, let me put the resistance on, set the line horizontal and see if this is okay, guys. So we are expecting the market to reach somewhere around this point. Okay, from that point to this point. Now this is what we can expect from the market. This is what we can expect from the market, and we can even place our FIBO there, guys. FIBO there, guys. Remember, guys, this is an approximated pattern of how the market will move in the downward trend, okay guys, or downward direction. But then it does not necessarily mean that the market will move directly on top of this thing which I drew here, okay? So this is just a projection in showing you how will the market react when going down. It shows you that the market will not go down straight with a line, but it will go down with a wave manner. You can see that the trend, you can see it's a wave form, guys. It's a wave. This is a wave. The market doesn't go vertically downwards and say, now I made profit. Okay, you must expect some pullbacks of the market, okay? Some pullbacks there, guys, some pullbacks, okay? Now, this is the part, the interesting part. You can see that on point 3, guys, around point 3, this point 3 is just on top of the 0,618, guys, okay? The 0,618, this number. Remember, this is our number. So this number will tell us about the temporary retracement of the market. So the market will retrace around this number and go there. And again, we draw this one. Okay. And after that, the market will also retrace when it gets to this point. Okay. When it gets to this point. So when it arrives around the 0,618, retraces, and when it gets to this point for the downward or the downtrend Fibonacci, you'll also see the 0,618 and this 0,618. The market will also retrace here and then complete the Elliott wave, which is around this point, which is the 0.5 here. Okay, guys. Okay, so now this is what we will see: a retracement around this and a turn around this. Remember, this retracement on this point is only temporarily. This is a temporary retracement, meaning that it retraces back and comes back to complete the Elliott wave. And what will stop it from going in an upward direction is this number, the same number, which is the 0,618, guys. Okay, 0,618 will stop the market from going up, and then it will be directed to this point, which is the 0.5, which will designate a change in the direction of the trend of the market. Okay, so here or from this point, we will expect either the change in the trend or a breakthrough. Okay, so depending on the Elliott wave of this scale, the larger scale, guys, larger scale, because we also have the larger scale. Okay, now looking at the larger scale, guys, just want to show you something. Looking at the larger scale, that is 1, 2, okay, 3, okay, 4, 5. Okay, the market will definitely go up from that point. Okay, guys, because of I was looking at the Elliott wave now from that point. So this will be the 5th point of the big Elliott wave, guys. This one. This will be the 5th point of the big Elliott wave, and the market will go up again. Okay. So now, our take profit, guys, we need to minimize. We need to minimize greed. Okay. You should not be greedy when it coming to this part of take profit. Okay, so let's put that there, and okay, so you see this is where we will take, so where we'll take our profit. Okay, let's take our profit here. Greed won't help us anyway, guys. Greed will only destroy us. Okay, we should not be greedy. Okay, there is a green part. Let me change the green. This green, guys, you can see it's more similar to that one, which is very inconvenient for us. We don't need the same green. You have to use this one. Yes, that one. Okay. So that we know that this green is for take profit. Take profit. Take profit. Okay. So take profit. And okay, take profit. Take profit. There's a take profit, and we have another one here, says stop loss. Okay, stop loss. The stop loss, we did denote that. Okay, denote this as red. It's red, guys. There is our stop loss. You saw that. You saw that, guys. And now, how many pips are we expecting if we enter the trade now? We are expecting, we look at this rate and we subtract this one. Okay, that will be 1.78. Okay, it's a calculator. That is 1. Let me move this one this way so that it does not interfere with my values. That's 1.7821, guys, minus this one, which is 1.7047. Okay, that is equal to 774 pips, guys. 774 pips. That should be written down. Okay, 774 pips. Okay, 774 pips. So profit, guys, profit 774 pips. So it's profit. So profit in pips, guys. Profit in pips. I should do this. Okay, where's my number? Okay, that's fine. Okay, so it's a 774. Okay, I don't know what happened there. Don't know where it went, but it disappeared, meaning that I have to start again, which is profit in pips. Profit in pips, guys, and that will be 774. Guys, 774 pips, guys. Now profit in US dollars. Okay, profit in US dollars. Profit in USD, guys. Profit in USD. This is multiply that by 10. Just add the zero. Just add the zero there. That is 7740 dollars, guys. 7,400. So $7,740. Okay, and then we get the profit in rands also. Profit in rands. Profit in rands. Profit in rands. There's profit in rands. Our JZ rands. JZ rands. Our rand now is struggling because of the political situation in South Africa. Okay, now the rand has fallen. We saw that for the past days because of how the markets has reacted towards our political decisions from our political leaders, guys. So you will realize that the rent now is somewhat around 13 rand 80 something, 13 rand. Okay, guys, let me check this one so that we become accurate. Okay, it's 13 rand 91 cent. Okay, it's a lot, guys. That's a lot. That's a lot, guys. That's a lot. 7 7. We have 7 7 4 0 multiplied by 13 rand 91 cents. Whoa, okay. Okay. Who will say no to such an amount? Who will say no to such an amount, guys? So that is 107. Okay, let me write the number somewhere. So okay, guys. I don't like what happened just now, but it's fine. I'll just multiply that again. And okay, there. Okay, guys. That is 100. You see, it's a number. It's a number. Okay, it's a lot of money. It's a lot of money. Where are you going to get this kind of money? Where can you get this kind of money? But someone will say, I can get the money from trading forex, which is true, guys. You can see these numbers only appear when you invest directly in the world's largest financial market, where every day we trade over 5 trillion US dollar. Okay, US dollars. So guys, don't be surprised when you see this kind of amounts. It is because of the volume of this market. The money within the market is too much, guys. It's a lot of money in this market. So guys, please trade forex. Okay, trade forex. Find a broker out there. You don't understand how to trade, you come to us, we show you, and you make money, guys. This is simple money just from this analysis. And your account maybe you deposited some money in there in your account, guys. You can, if you don't make this, if you get a peep, then that means that is 10,000, guys. You can live from 10,000 rands per month. Okay, you can live a good life. Okay, so guys, this is the signal, guys. The signal is to sell the Great British Pound against to sell, go short. Okay, signal is to go short. Signal short is short. Okay, you go short, guys, and make profits, a lot of it, guys. You can see that from this. Okay, guys, it's the end of today's video, guys. Please feel free to contact me and get mentorship, or contact me just to get information, guys. I'll give you the information, and I do have a lot of information on forex and other types of markets also. So just contact me and you get the information. Okay, guys. Okay, right. Please watch my videos on YouTube also, and subscribe to my signals also, guys. You'll really make profit out of it. If you want us to help you invest your money in your trading account, guys, we can help you do that and give you signals directly to your phone every day, and you make those profits. Okay, if you want our strategy, you contact me on this number and I'll show you how the strategy works. Okay, Okay, guys, the end of the video, and we'll see you next time on the other video. Thank you.